So think of a reoccurring payment that you make each month, whether it is a streaming service such as Spotify or possibly the $13 monthly fee for Netflix. Either way, think about paying these bills every month in the form of dividends that you earn from your investments. Now this would leave you with an extra $13, let's say for the Netflix example. That's an extra $13 a month to either reinvest or possibly buy about 4 McFlurries. Whichever one you choose, I think they're both pretty good decisions. My name is Logan Fisher, and I am creating videos about personal finance, investing, and other wealth building topics, all while documenting my own journey to financial freedom and hopefully early retirement. Doing so allows you guys to follow along and learn from the successes and also the many mistakes that are bound to come in the future. Doing so will allow you to maximize your own time as well as money, of course, invested so that you can build your wealth the best and most efficient way possible. And in today's video, I will be talking about Invesco's S&P 500 High Dividend Low Volatility ETF, which is also known as ticker symbol SPHD. And I will show you why this is my favorite monthly ETF, monthly dividend paying ETF. And I'll also show you a little bit more about what's inside it and how you could possibly retire off of the monthly income that you receive in the form of dividends with just this one ETF. So stay tuned. This ETF is comprised of 50 S&P 500 companies that are most well known for having historically low volatility when the market has big swings, either up or down. They tend to not move as much. And they are also known for having very high dividend yields and pay out a good chunk of their profits each quarter or possibly each month, depending on the company. Some of the largest holdings in this ETF are Ford, IBM, and AT&T. This ETF is nearly 22% focused just solely on real estate and REITs, which are notably very high dividend payers and often monthly dividend payers. But what I love most about this ETF, SPHD, is that the dividends are indeed monthly and they're not just a unstable, very volatile, new, fresh REIT or real estate investment trust like most monthly dividend payers are. This ETF is actually comprised of stocks that have been along for decades, possibly even 100 plus years, and they're also known to all pay fairly healthy dividend yields. But when it comes to this monthly dividend paying ETF, we have to remember that it's not just a form of monthly cash flow coming in. It also appreciates in value. In fact, since 2014, in the last 5 years, it has grown over 36%, which averages out to over 7.2% per year, which is not bad. But if you include the dividend payments and you have decided to reinvest those dividends, like most investors definitely should, then this brings up the percentage increase to nearly 11% per year, which is definitely on pace with the S&P 500. Now let's get into the number of actually replacing bills. So currently the dividend payout for SPHD is about 15 cents per share per month. And the current share price at the time of this video is sitting at $42 per share. This means that in order to pay that $13 Netflix bill, we would have to have 87 shares or $3,654 worth of this Invesco low volatility, high dividend yield ETF fund. Now yes, $3,654 is a nice chunk of money. At least in my opinion, it definitely is. But if you continue to reinvest those $16 every single month and continually compound that growth, and eventually you will be able to pay off your phone bill every month. And then if you stay at it and you're consistent and you keep reinvesting those dividends, hopefully that will grow into your expenses for your gas as well as your food for the month. And then if you're really persistent, really dedicated, and really set on reinvesting dividends and possibly get a pay raise or two along the way, and you're able to contribute more each month, then you could maybe replace the mortgage every month with dividend payments. And then if you took it a step further, you could possibly feel safe enough to actually retire and just live off of these monthly cash flow from this dividend payment that's coming in to replace all of your living expenses comfortably. But that is definitely a huge leap and takes some serious guts. Either way, these monthly dividend payments are very exciting, at least for a financial nerd like myself. I love the concept of actually stacking up the paid amount of dividends and reinvesting it so that next months are even larger, so that you can reinvest those and the following months are even larger, and so on until hopefully a 9-to-5 job is no longer a necessity for you. Speaking of actually quitting that 9-to-5 job and just living off of dividends to supplement your source of comfortable living, not living luxuriously and not living extremely frugal, but living a comfortable lifestyle, let's do some math and see how much it would cost to actually do so. So according to leavingthefolks.com, I don't know there, but apparently it is about $2,100 per month for a Michigan resident to live the average lifestyle. This means that you would have to own 14,000 shares of SPHD or $588,000 invested in order to generate that $2,100 monthly dividend payment so that you could live comfortably. Now this definitely seems like a lot and you might think, no way, but with solid dividend reinvestments as well as some discipline and a few less McFlurries each month, it definitely is possible to do over the course of a few decades. So like I said, in order to actually supplement your 9-to-5 job and make it a full-time living off of just dividend payments, it's going to take a long time. It's not going to happen overnight, and you need patience as well as a lot of determination. But once it happens, it is well worth it and you are able to retire early, but you have to start. The best time to start is now. If you let another month go by without collecting a dividend, it's just another month wasted and you're not building your wealth as quickly as you could. So please, I encourage everyone just to start investing as soon as you can. Get your feet wet, try to learn stuff, do your own research, whatever it takes. Buy a course, get a personal investor, whatever you have to do. Just do what you have to do to start investing, because I promise in the long run, it's going to be much better than getting that extra McFlurry each week. So if you've made it all the way here to the end of the video, I want to say thank you very much. It really does mean a lot, and I'm impressed at your attention span, as most of you are probably already back to scrolling on Instagram. But if you're not, I greatly appreciate it, and I'll see you next time.